What's going on, traders? Welcome back to another video here on my channel. Today we're going to talk about the stock STAF, the absolute monster that's up 285% on the day. We're going to talk about it, kind of walk you through what's going on so that way you can learn what's taking place so that you can better accommodate yourself for the next time you see a stock that is running like this. I'm going to show you supports, maybe show you resistances, and show you a couple different things about the stock. And as you can see, it is dumping like crazy right now, which is actually pretty cool. And actually, real quick, you could expect that this stock is getting ready to bounce right off of this purple line. I can almost guarantee that we're going to see this kind of bounce right off this purple line and start kind of recovering just a little bit because that's the 200 moving average. So real quick, do pay attention to this 200 moving average area as it's just starting to bounce off that level. But you could expect that this is going to pick up a little bit off this purple line here. But regardless, we have a 285% runner in our hands. The stock is STAF. All right, so first off, let's start here on the daily chart. Kind of want to show you something here. All right, so one thing that you always have to do with these massive penny stock runners or these big stocks is you need to look at a 1-year chart. Why would you look at a 1-year chart? A 1-year time frame is going to give you the broad overview. It's going to help you see, kind of like this. You see how close I am? You can't really see much, but then when I back up, you can kind of see that I'm not that tall, my arm span's not that long, and I can only reach about that high. That's what a 1-year time frame does. It allows you to see the big picture, right? You can't see the M on my shirt from here, but now you can see it. You can see that Michigan is probably the best college football team ever. So that's the idea. You look at a 1-year time frame so you can get the big picture. And what does this picture here tell us? What does this 1-year time frame on the stock STAF tell us? I know what it's telling me. What it's telling me is it has resistance at $5.70. You see recently, not recently, but you see back in time, STAF popped up to this 570 area where it says high 570, right? So if it had recently gone to $5.70, we know that the stock could get there again, but if it does get there, that $5.70 mark might, in fact, be a resistance. Resistance meaning it's going to have trouble getting through. It might get up there and it might stop, might have a hard time getting through there. So that's what we know. That's why we always look back at the yearly chart or a 1-year, 1-day chart. Get the big picture, all right? And the big picture here is telling us that at $5.70, the stock had reached before and sold off. If we draw a horizontal line from 570 right across, what do you see? Well, we see that for a long time, the stock was just downtrending. It had a few pops, and it went to, and then it dropped massive, and then all of a sudden, who the hell knows? Oh, it got a bunch of volume. Look at that. Look at that volume spike. That's what drove the price up. But regardless, it goes and it spikes. Next thing it flies up, and everyone's like, "Oh, when's it going to stop? When's it going to stop running? We don't know. And then boom, look at that. It reached just about $5.70, which was previously a high the stock had reached. And guess what? It stopped on a dime right at about 570 and ended up dumping. So again, 570, stock reaches just about 570, and it starts to sell off. Okay, let's go look at it. We'll just do a 5-day chart. So looking at this 5-day chart, it reached 565 and then it started to sell off from there. Okay. And as you can see, it actually had like a little mini bounce in there from the 200 up, and it's trying to do it again, but regardless. So that's number one. Whenever you find yourself on one of these massive penny stocks, is you always go to the 1-year time frame and tell yourself, where do we think we could see resistance? For one, 570, that 570 mark was not the only resistance. You should be going off of each other level. So we had some at 570, there was resistance. We also had reached a price point of 550 before, so we should mark that level off. We also reached kind of a consolidation phase. First we also had these pops here at about 450. So this one here and here. So we should mark off that as a resistance level. We should also be marking off, and I'll map these out for you. So look at these pops here. Those are resistance levels. This area right here is a major resistance level. Why? Because it was just consolidating sideways for a long time and then it dropped. So that creates a significant level you should watch out for. So all these spots are what we map off as resistance on the stock. And then from here, we kind of just map off these resistance areas. And once we have these resistance areas mapped off, we now have price targets on our chart in which we might see the stock start to sell off from. So now that we have all these different resistance spots, let's take a look. And we also do one pre-market here. Okay, look at all these different resistances. And do you guys notice anything interesting about the stock? That each time it reached one of these green lines, the stock started to struggle. So for one, we had a pre-market resistance at $3. The stock sold off, and once it picked up, what did it do? It hit the $3 mark right here, sold off. We broke through the $3 mark. What happened? It hit the $3.50 mark where we had it. And guess what? It kind of struggled there 2 times before finally breaking out. What happened next? It popped up to the next green line at $4.54. Sure, it broke over for a second, but then what? It ended up selling off. And then it kind of just hovered around that green line for a while. And then once we broke through that green line, we went up to the next one. And what happened? It's seen resistance right at 555, that green level or that green line. Then what happens? We sold off, came right back up to test it, failed it again. And what's happening now is now we're fading out to this green line and it's starting to kind of catch some support there. So what's the most important thing you need to do in trading a penny stock? Always, always, always go back to the 1-year time frame and look at previous price action to determine where the stock has gone before. How high has it reached? Okay, and then you will draw horizontal lines across on each one of those levels. Those levels you draw off represent a price point in which, if the stock goes that high and hits that level, it might start having trouble going higher, and that's what we call resistance, okay? It is very common that you're gonna see penny stocks hit these levels and then stop. Why? Why is it so important to go back in time and map off resistance levels on penny stocks specifically? I'll explain. Because more likely than not, all penny stocks are going to fail at some point, and penny stocks are very unreliable companies that at most point don't do well. They keep trending down, okay? Penny stocks normally trend down. They don't trend up. They normally trend down and have like 2 days where they spike like crazy, and then they go back to trending down. So if a penny stock naturally trends down and it's naturally going down, that means that it's probably going to have a lot of levels that it was previously at, or previous resistance levels that it was at, that we should mark off. And vice versa, if a stock is trending up, it's not going to have a lot of resistance points because it's going up, but it would probably have a lot of support levels below it at which the price was at previously. Does that make sense? If a stock is trending down, it's going to have a lot of previous highs that may be resistance. But if a stock is trending up, it's not going to have resistance above it because it hasn't ever gone that high. It would more likely have a lot of support below it because as it stair steps up, it creates levels below it. So stocks trending up have a lot of previous lower price points that would be support, and stocks trending down have a lot of previous price points that were higher before that might act up as resistance, okay? And this is a perfect example to show you just how well these resistance areas hold up. As you can see, we were previously at 570 on STAF, and then we faded out for a long time, but on this massive day, it popped right up to about 570, and it ended up starting to pull back from there. That's why it's so important to watch those key levels on stocks. Now, to discuss this a little bit more, you may be asking yourselves, how would you have known to trade STAF today? Well, you really wouldn't have. And I will be completely honest here, is that I didn't even look at STAF today. I didn't even know it was going to run this big until it hit my high of day momentum scanner. Why? Because pre-market, and I'll zoom in over here, pre-market, this is what the chart pattern looked like. That's what that looked like. And to me, that looks like absolute garbage. That's a no-no. That's poor. This pre-market chart had zero volume. Just, I mean, some, but it had nothing going on. So you would have not known to really watch STAF pre-market. You could have watched it thinking it might do well, but based on the chart representation early in the morning, pre-market, there was no sign, there was no signal, there was absolutely nothing about STAF that would have said, hey, today I'm going to run 300%. So if you're a newer trader, you've been trading for a while, do not beat yourself up for not knowing or not catching STAF or knowing that it was going to run. Why? Because nobody knew it. Not even no one knew it. Okay, maybe someone, who knows? But I can tell you right now, majority of the whole planet, nobody knew that STAF was going to run 300% today. And that's okay, because you don't have to know it's going to run 300% to make a winning trade on it or to capitalize on a lot of the move. What you need to know is that once it does start moving, you get on the train and you ride the wave and you map out all the levels that the stock might stop running, okay? That's what it's all about, okay, is knowing that once you found it, let's map off some key levels so that I can understand if this does keep going, I should be able to get in here and then maybe get out around this area because I know that people will start selling there. And that's those resistance levels. So again, you would have had no clue that STAF would have been a good runner this morning. I didn't know either. The only reason I found STAF today was because my high-a-day momentum scanner alerted it. So throughout pre-market trading, it looked like absolute shit. Low volume, absolutely nothing, doesn't look good at all. Then all of a sudden, the market opens and we pick up in volume and it instantly pops up, you know, about $1.50 a share right here. At this point, right, where I'm drawing these arrows, at this point, that's when I started looking at the stock because it was alerted on our scanners that it was hitting a high a day. And our high-a-day momentum scanner picks up stocks that are moving fast on a lot of volume and they're meeting certain criteria. That's the only way you would have found the stock early on, or unless you're involved in a chat room that said, hey guys, look at STF, it's starting to move. Other than that, pre-market, it was absolute garbage and there was no signs that it wanted to have a significant day, let alone a 300% gainer. So if you're salty or if you're frustrated that you didn't catch this 300% mover today, don't worry because there'll be more. But again, most oftentimes, these massive 300% runners, 500% runners are stocks that look like absolute garbage in the morning, or they're stocks that you didn't even know existed until they start moving, okay? And the only way you're going to be able to get yourself involved or find these stocks is usually by a high-a-day momentum scanner, some type of momentum scanner, or be involved in a chat room that has seasoned traders. Don't just join any chat room because most of them are filled with garbage, but as long as you're involved in a chat room that has reliable traders, people who know what they're talking about, that could alert you and say, hey, just make sure you watch this stock because it is moving. That's really the only way you would have figured this out, okay? But once it hits the high-a-day scanner and we start watching it, that's where we start to map off all these green lines you have on the chart. Once you find it, that's where you go instantly. Once you find it, you instantly go to the one-year chart, start mapping off your levels and watching the stock from there. And that's how you're going to be able to map off these levels at which it might sell off or you might start popping through, okay? And of course, you're going to have to learn things like, you know, bullish pennants, bull flags, bear flags, and different patterns so that you can know when to enter. But that's kind of the breakdown and the follow through in a way that you're going to be able to find these big runners, how you're going to be able to, basically, accomplish trading them. All right. Again, it didn't look good pre-market, so you need something like a high-day scanner or a chat room to find it. Once you do find it, then you map off the key levels that it's has seen resistance, right? And that's how you're going to be able to better map off price targets in areas where the stock might stop running. I mean, this is a picture-perfect example of support, of resistance, right? We've seen it hit 570 quite a while ago. Next thing you know, it pops to 570 today and absolutely crashes. Now, for those of you that are currently invested in it or holding on for dear life as it's dropping here, what I would say here is, the question a lot of you guys are going to have for tomorrow, especially in our pre-market live stream. By the way, if you've never tuned into one, you should do it. We go live every single day, 8:30 in the morning, Monday through Friday, Eastern Standard Time, to go over watch lists in the morning so we can better help you guys kind of pick and choose through some stocks that we think are going to be good for the day, or sorry, I think will be good for the day. So in my professional opinion, what do I think about the stock STAF? What I think is today it received news. All of a sudden, it got hyped up and started getting bought up like crazy. It's overvalued. This is purely a hype and momentum play that will soon die out. If you're long on the stock right now and it's up 300% and you haven't sold any, that's a mistake. Secondly, if you're up and you're holding long on the stock and you're thinking about holding for a couple days, that's a no-no. So what's probably going to happen is we're probably going to see the infamous penny stock pattern repeat itself. What is that penny stock pattern, Connor, that you're going to tell everybody on YouTube for free? Oh, that's right. That penny stocks have low floats. When they have low floats, high demand, they run chances of growing 350% in a day. The likelihood of the penny stock that just grew 300 to 400% in a day to continue running the next day is pretty unlikely. Not that it doesn't happen, but it's just unlikely. So when you're trading stocks, you're really trading a game of probability. And if the probability points to STAF will most likely start crashing and burning in the next few days, anybody who's long biased on the stock and made good money today, you should sell it. Don't hold the bag. And tomorrow, what we're probably going to see happen is one of two things. Because right now, what's taking place is it's dumping out. So all the people that wanted to short sell the stock are starting to short it down. So we got a lot of shorters coming in on the stock. So what we're probably going to see happen here is that today, towards the end of the day, we'll see this dump out pre-market tomorrow. If the short sellers are still in the stock, they're going to squeeze it back up to retest this 505 area. Once it gets to 550, 560, 570, we'll probably see it double top and dump out. So conclusion, don't hold the bag on STAF. It was just a purely hype and momentum play today that might continue up tomorrow. If it does, it needs to break over 550, 560 resistance, and then it could keep going higher. And if it doesn't break 560, 570, we'll see it double top, and then we'll see it crash and burn because all the short sellers are going to come in and short the stock down. So conclusion, if you've made money on STAF, look to sell today. Don't get greedy and hold the bag overnight because it runs a strong chance of dumping all the way back down to $1 a share. Maybe not tomorrow, but in the coming days, it's definitely going to dump all the way back down. Don't believe me? Well, let's take a look at a stock that had recently done this. Well, let's see. What's ABIL doing these days? See, if you're not familiar, ABIL was a stock that ran like crazy from $2.14 all the way to $14. And where's it at now? Now it's at $7 a share. That was a recent penny stock that boomed. And now it's all the way down to $7. What was another recent one that did pretty well? Trying to think of another recent penny stock. There was GBR. That was another one. GBR. Oh, what do you know? Oh my gosh. This almost looks exactly what I just explained. The stock picked up in momentum. It went like crazy. And then it crashed. And it's all the way down to $3. It started at about $1.52, and now it's all the way down to $3 after going to 13. Oh my gosh. So I just told you what's most likely going to happen with the stock STAF. It's going to crash and burn, okay? So don't get caught up trying to hold the stock. Remember how I just said on STAF, what we're most likely going to see is it's starting to fade out towards the end of the day, and then tomorrow it might squeeze up to retest the previous high. So it starts going down. Next day it squeezes up to test the previous high, and then it dumps. Well, let's go look at STAF and see what it's doing right now. Let's go on a 1 minute chart. Okay, it popped up. It's starting to fade out. So short sellers are coming in to push it down. So tomorrow what we might see is something like this, where it fades down and then all of a sudden it squeezes up to this level and then it dumps. Okay, so be very cautious. This is a very common pattern you'll see with these big penny stocks. Hope you guys liked the video because I probably just gave you so much information that, you know, a lot of people will charge you $5,000 for. So take it, run with it, love it. I will see you guys on the next video. Please do give me a like, share, and subscribe, and share the video as many times so you can influence as many traders as possible so that they too can understand what takes place with these penny stocks. Let's not leave them in the blue to get absolutely crashed and burned when these things dump. Please do share the video, like, subscribe if you haven't already. Would appreciate the support, and I'll see you guys on the next video. Take care.